Hey gang, Akil here, and welcome to another Forex Market Preview video. In today's episode, we're going to take a look at the New Zealand yen, and I'm going to show you something that's going to make your technical analysis and your trading life a lot easier. Alright, so let me bring my chart over, and again, we're looking at the New Zealand yen. I'm on the daily chart right now, and I want to start off by just walking you through recent price movement. You can see price action made a rally really from our lows. We were in consolidation as we kind of based off from our previous bearish trend. We hit a low mark of about 72.66, and then we rallied all the way up to 83.65s. Price action then retraced. We came up to retest that level looking for a continuation in our current bullish move. And well, that previous level of price was rejected, meaning that price action was not able to put in a higher high, higher close. Instead, it was rejected at that level. And we saw not only a pullback to our previous lows right here, right? The valley section of our double bottom, double top formation. This is called a double top, by the way, for you guys that are new. One test, two tests. Not only did we see a move back into the valley area of that double top, but we saw a break and close below that level. And we know that's a signal for not only a rotation in trend, meaning that the previous trend was terminated, but it could be a rotation in trend, which means price action could be putting in a bearish move now. And that's confirmed by the outside return and then the next lower low, lower close. Now, if we go down to our lower time frame, our 4-hour chart, here's the opportunity that exists. So price action has been in a heavy bearish move here, and we're starting to put in a simple pattern formation called a falling wedge. And you know, that type of pattern formation comes when you see a steep move in price action, right? A steep move down, a high momentum down, and then the markets start to kind of trickle off here. So we go from a sharp move down to the market kind of just still going in the downward move, but you can see not as much momentum. We're kind of going down, retracing, going down, retracing, just moseying our way down to new structure lows. At the same time, if we just pull up our RSI indicator, this is our relative strength index down at the bottom, you'll see that we have divergence as well. This is called bullish divergence. And what that is essentially means when what you're looking at on your price chart is the opposite of what you're seeing on your indicator or your oscillator. So you can see that price action is moving lower, right? We're creating lower highs and lower lows here with price action. However, our RSI indicator, right, our relative strength index, is creating higher lows and higher highs. And this is, when you see this combination, you can look at it as a loss of momentum, and you can start being on the lookout for a potential reversal. And when you add this pattern formation as well to it, this pattern formation typically breaks out to the high side. So when I see this chart, when I go through that IPDE process, identify, predict, decide, execute, that's the 4-step process that we go through each and every time we're evaluating a price chart. I identify what price action is doing. My prediction is that we're going to see some type of relief, so some type of breakout, which is going to come in the form of a pullback. Now, for you guys that are in the transformation course, whether it's the 12-week transformation course or our newly updated version, the Ultimate Trader transformation course, we're going to be talking about breakouts in Monday's strategy lab. I got a question from a client who said, hey, I'm looking to add another tool to my arsenal, a different style of trading, and I wanted to kind of pick your mind on breakouts. So if you're able to, make sure you attend Monday's session live. We're going to be really working through putting together a strategy for breakouts, talking about entries, stops, targets. And you know, it's always good when we have, if you're interested in breakouts, we can have multiple ideas and really develop a plan in which you guys can go out and test. So if you're into breakout trading, make sure you attend Monday's session live. And of course, if you can't, it's always recorded and posted later. Now in today's video, instead of talking about how to trade the breakout, and this is a trading opportunity in its own, we want to keep things simple. We're going to talk about how to trade the pullback, right? So let's assume that price action does break out. Now, again, doesn't mean that price action will break out. We never know. We can shoot down. New Zealand and both the yen have been kind of volatile lately. But let's assume the market does what our prediction predicts, and we break out to the upside. The next question I want to ask myself is, well, where can I get short? If price action breaks out and breaks up, then where is my next shorting opportunity? And this is that if-then thought process that you hear us talk about a lot. The thing about the markets is that the market has so many moving pieces. And I get this a lot from traders, and feel free to let me know if this has ever been you in the comment section below. But we see a lot of traders that look at a chart and they just see so many things. Akil, this is doing this, that is doing that, this is moving here, this looks like this. And when you have so many moving pieces put together, it's really, really hard to concentrate on what you should really be paying attention to. Think about it as being like a magic trick, right? The sleight of hand. If you guys ever been to a magic show, the tricks that magicians do, right? The key is to distract you with something else. So there's girls walking around, there's loud noises, and there's colors, and they're doing all this waving hand stuff. And at the same time, while you're distracted with all the showmanship that's going on, right? They're secretly doing the real trick behind your back. And the markets are the same way. Again, the market's intention is to cause as many people, as many participants, as much pain as possible. So it's going to give you all of these different moves to distract you and bait you into doing this, bait you into doing that. And you really have to have, if you want to catch the good moves, right, consistently, I should say, you really have to learn how to ignore the junk and really focus on what you need to focus on. And having that if-then thought process is a great way to do it, because it's the closest thing we can do to making ourselves act like a mechanical system, right? For you guys that are systems traders, you may have something simple as, hey, when the 20-period moving average crosses under the 39-period moving average, I buy or I sell, right? It's a simple if-then. If this happens, then I do that. We want to do the same thing with our trading, and that allows us to kind of become on autopilot, right? Think about it like this, right? Think about driving a car, right? When you're driving a car, there's so much stimuli happening, right? So much stimulus happening outside of you just driving the car. There's music playing. You're thinking about your next project, right? You're enjoying the sights. However, right, once you get any type of glimpse of like a red light or a red color in front of you, what do? Right? You take your foot off the accelerator and you start to push down on the brake, reducing the speed of the car coming to a stop. Now, we know we're supposed to do this because that's what we're taught. That's what we're trained to do. But when you do that in the car, you're really doing it subconsciously, right? You know you're at the point right now, most of you, I hope, where you no longer think about it. You just automatically do it, right? It's no longer going through the thought process of, okay, red light, then I go this, right? It's automatically, if I see red light, then foot pushes down on brake. And we want to make our trading the same way. We want to be so trained in our trading, so trained in that if-then thought process that boom, it's automatic, and that's what's going to help us attack these markets. So if price action breaks out to the high side, right, then I'm looking for a retest of our next level of structure, right? I know that look left, structure leaves clues. That's the next point in the market that I can expect price action to come to before a potential reversal. Now, the question that often comes with that from many traders is, well, Akil, where is structure? How do I identify structure? And just as we talked about before, doing so is something you have to train your eyes to see. You just can't watch a few of these videos and think you're going to understand how to identify structure. You have to spend hours and hours and hours and days and days and days in front of charts, right? Training your eyes on what structure levels you should be paying attention to. And that's the only way you're going to become good at it. Now, if you're looking to kind of automate that process more, we do have an indicator that helps drastically. And this is something that we originally just we put in to help for training purposes, a few years ago. And ever since our trainees, I guess, have been loving it. And this is going to be called the DSR indicator. So I want to left click my indicator tab up here. I want to scroll down through all these fancy indicators I have but never use, and I want to go to my Trading Power DSR. And I'm going to put two of them on, all right? I want to do a major and a minor. So the major one, I'm going to keep it red and green, right? Resistance levels are going to be red. Support levels are going to be green. And I want to put that to my higher time frame, which in this case is going to be the daily chart, since I'm on a 4-hour time frame. Right? I'm going to apply that, give it some time to load up. And now that indicator is going to be on my chart here. Oops, sorry. I can just make it simple. Let's do 1 day. Easier. There we go. That's going to be better. Now I want to take my second DSR indicator and I want to make that black and blue. It doesn't matter what colors you do. I just want to make them different. And I'm going to put that as a minor level. I'm going to make that 2 times my time frame. So I'm on a 240 chart right now, which is the 4-hour chart. I want to put that on a 480-minute chart, and I'm going to click OK. And you're going to see both of those indicators on my chart now. You're going to see the black and blue boxes are going to be my major DSR levels. That represents levels of structure based off the higher time frame. So the red and green boxes are going to be levels of structure that I need to pay attention to based off my daily time frame. The blue and black boxes are going to be levels of structure I need to pay attention to off of my 480-minute time frame. And what we notice here is that when we come down back to our level, we have 2 DSR zones printed, right? We have a DSR zone right in this area, right at a retest of previous structure lows. So at the point where price action came down, right? We retraced. This was a previous new structure low. We retraced to have an outside return, right? Before putting in another new structure low. So the first area is going to be right there at these lows. The second area is going to be right here at these highs. So as I'm looking to generate an idea for what I want to do with this pair for next week, right now I know the 2 levels that I'm looking at, right? Level number 1 is going to be right here for a potential short. Level number 2 is going to be right here for a potential short. And all I have to do now as a trader is I need to wait for price action to come up here. And then I need to look for my reason for entry. And again, reason for entry is going to be different per trader. That's why we don't like to talk about them a lot in these videos. We teach really creating your trading style, your trading plan based off your personality, based off your philosophy. So if you're naturally an aggressive person, meaning you're the person that doesn't look left before crossing the street, you just run and go for it. And, you know, if you get hit, you get hit. But if you make it before everyone else. You may want to have a more aggressive approach to the market. So you may do something, and again, this is just an example. You may do something like I'm just going to put a sell limit order right here. I'll put a sell limit order right here. I don't really care about any confirmation. I don't need price to show me that we're likely to reverse. I just want to sell it once it gets up here, right? Where on the other hand, say a very conservative trader, they may need to wait for, let's say a 26.18 opportunity. They may need to see everything in the world lining up, right? If price action comes to this level, then I wait for double top, right? If I get double top, then I wait for divergence on the RSI. If I get divergence on the RSI, then I wait for 26.18 before entering. You know, a very conservative approach. Again, this is just an example. And before you ask it, because every time we do this, I get a newer trader that asks, Akil, what is the best approach? And there isn't. There are pros and cons to both. You know, for the aggressive trader, if price action blows right through, guess what? Well, they're out the trade. They never had any confirmation. You know, they took an aggressive short and they got stopped out for losses pretty quickly. Where on the other hand, if you want to say, I want to be super conservative and wait for, you know, a 26.18 type of trade to enter, well, guess what? If price action just comes up here and creates a V-top, something like this, right? Then guess who never caught the move, right? The aggressive trader would have caught the move. The conservative trader wouldn't have. So it's a balancing act, and that's everything in trading. But that's what I would be looking for at this level. So this is going to be the first level to look for, this first blue DSR indicator for a potential short opportunity. This is going to be from about the 78.80s level all the way up to about let's call it 79 even, a nice psychological number up there at 79 even. Second level is going to be a little bit higher at about 79.35s all the way to about 79.60. So 2 levels that we can look for shorting opportunities on the New Zealand yen here, both DSR minor levels. And again, if you guys are interested in the DSR indicator, just head over to our website, www.tradeempowered.com. I'll go ahead and load it up for you right now. If you head over to products and services, head over to the products and services tab, just click that at the top. Zoop. You're going to see a tab that says software and indicators, or you can just click it, scroll down, and you can check out your DSR indicator right here. And trust me, it's going to make your make your life a lot easier as far as training your eyes to recognize those support and resistance levels, and really cutting down on your analysis time as you can see where the structure lies on your higher time frames without bouncing back and forth from each chart. So hope you guys enjoyed today's video. Again, tomorrow, 12-week transformation members, ultimate trader transformation members, if you're interested in breakouts, make sure you attend tomorrow's live session. It's going to be great. Just make sure you check your local times. I know the daylight savings time has been all over the place, so make sure you're there at the right moment, 9 o'clock New York time. And for the rest of you guys, I'll either see you in the live room during the week, in the Syndicate throughout the week, or if you're just involved in the free video here on YouTube, I'll see you next week with another episode of the Forex Market Preview. Until next time, plan your trade, trade your plan, and I hope you have a great week of trading. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradingPower.com website, or also take a look and you'll see more videos available for you. Have a good one.